Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Tuesday, April 16th, 5:11 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with the Revere Roundup Daily Market Insight video. State of the market, we're in a short-term and medium-term pullback. Check the trend gauge over here. We've got leaders flagged as bearish, but with the neutral sub arrow, as they did outperform today, and I've got a new 21 over 21 list going back to it by popular demand. Going to show 21 leading stocks that are holding up above their 21-day moving average. Got to keep your watch list fresh. You never know what's going to happen in the market. Assume nothing. Short term, we're in a downtrend. All five of the major indexes below their declining short-term 21-day moving average. Medium term on neutral, we've got the Dow, the small and mid caps below their 50-day moving average. With the moving average rolled over, we've got the S&P 500 and the NASDAQ 100 below their 50-day moving average, but still an uptrending slope of the line. We want that. If that slope of the line continues and we recapture it, good. If it rolls over, this will go from neutral to bearish. Long term, all five of the major indexes still above their 200-day moving average. So what happened today? Had a little bit of everything. Powell spoke. He was hawkish, commenting about economic growth still strong, employment still strong, inflation being stubborn, delaying of rate cuts. But the market, it was volatile, but it took it in stride. No further progress to the downside is one way to look at it. If you're a glass half full kind of person, indexes volatile chop today, but leaders with some outperformance. Here are the final numbers. The big seven actually positive on the day, 0.14%, despite Apple being down 1.9%. Netflix was up 1.7%. RG8, this is our 8 growth ETF composite, down 0.25% to the downside. ARK-K down 1.6%. IBD 50, chock full of leaders, up 0.23%. S&P 500 opened slightly positive, chopping around, ended up down 0.2%. Equal weight down 0.55%. That'll tell you something about breadth. It was not healthy. NASDAQ 100 just barely positive, equal weight down 0.1%. Dow was positive as United Healthcare, which had been acting as a boat anchor on it, popped on earnings, and that's the highest price stock in the index, leading it to about a 0.2% gain on the day. Mid caps and small caps both down between 0.4 and 0.5%. There's your breadth problem. Global 60/40 down 0.41% as yields popped again. In-house GROTECTION down a slight 0.05%. Some more stops hit today. We'll talk about it when we get to the tail of the tape. Let's get right into it. Start off with, well, I'm giving away the 21st of the 21 over 21 list there, Charles Schwab, but let's go to the S&P 500. Bring up a 5-minute chart here. Don't short in the hole. You don't want to go short on the third day down, and no further progress to the downside. We took off our SPXS. That was our hedge against our SPXL that we still have long. And you can see the tight range chopping around 50/40, looking like support at least for today. Some volatility as Powell was speaking, which was after, I think, 1:15 p.m. Eastern time. So where we are, let's take a look at a weekly chart. We're trapped between the 10-week and the next area of support down is the 20-week / 100-day moving average. In this area, our target beta is about 0.5. That's actually the ceiling. So we're willing to make half as much as the S&P on a bounce into the 50-day, or lose half as much as the S&P on a move down toward the 20-week. We're basically right smack in the middle of there. And so third day down, we're kind of set up for a bounce. What happens if the S&P and the 10-week have rolled over by then? They could be acting as resistance. We want to see what happens when we hit there. The slope of the line on the daily 50-day moving average is only rising by 2 points a day now. So starting to flatten out. Where you roll over, you got to flatten out. A bounce up to test it would be completely normal behavior, and then we see what happens on that bounce. NASDAQ 100 flat on the day, no further progress to the downside, and you can see it's kind of this 430 area acting as support. It was a support slash resistance area back here in February as we popped above it and below it several times over the course of a couple of weeks. Look left to be right. Dow Jones Industrial Average, inside day and positive on the day, as I mentioned, with UNH mid caps. Down again, making another lower low, coming into a bit of a support area here as that 514 was the breakout level. Small caps, another lower low, however, finishing in the top third of the range if you're, again, glass half full person. But notice relative strength making a new low before price, not good stuff. Coming into, if you go to a weekly chart, coming close to the 40-week moving average, 2.7% away. That roughly corresponds to the 200-day moving average. On a daily chart, 2.9% away from that. All right, the VIX. With the market down, the VIX was down also choppy intraday, down 4.3% onto the dollar. Somewhat tight range today, but higher still. How did that impact the precious metals? Well, gold eked out a small gain. Gold stocks, however, down 1.5%, finding a little bit of support near the 21-day moving average. And silver down 2.3%, finding some support at the 8-day moving average. Bitcoin down again today, less than 1%, range tightening up. How about bonds? BND, broad bond index, down, meaning yields were higher, prices making lower lows. That means yields making higher highs. Here's TLT, the long bond, price down again, breaking the low of the recent range. The yield on the 10-year up. Man, yields not good for growth stocks, and the 10-year breakaway gap as well, up 3.56%. So that's our interasset correlation chart. Chartapalooza. Let's go to the tail of the tape here. So sustained break. We're on the bear case. Powell, as I said, solid growth, labor market strong, inflation stubborn. Third day down. Third day below the 8-day exponential moving average and the 21-day moving average. Expectations negative down here as long as we're below a declining 21-day moving average. All day volatile chop today. In sectors, semiconductor strong, aerospace and defense strong, along with the dollar and yields to the downside. Home builders, oils, and regional banks. More trimming. Micron gap down. We took our small gain on it. Lilly making a lower low. We took our gain on that as well. VDE, energy, oil holding up, but oil stocks not as much. So we took a small loss on that, and we closed our SPXS hedge as the market seemed to put in support. So adjusted beta 0.5, that's kind of our target for this range. It's the ceiling actually until we get back above the 50-day moving average, made up basically of NVIDIA and an index long. That's what we're down to here. And bottom line on the day, Powell hawkish, indexes chop, leaders outperform. As I said, we're set up for a little bit of a bounce, but what happens when we get up into the 50-day? And if we break lower, that means the market, despite being in an oversold state, short-term oversold state right now, we go lower. That will tell you even more about the strength of the overall market. Let's go to the 21 over 21. Are there really 21 stocks above the 21? Yes, there are, and here they are. NVIDIA, our last holding, basically right on 21. FCX, we locked our gain on this last week. Yes, last week. Bounced at the 21 today. Micron, we stopped out on the gap down above the 21 on really a market call. This is clearly a leader. Great fundamental numbers going forward. We want to be in it if the market is acting right. You know what the market's doing right now, though, right? Super Micro with a big upgrade today, up 10.6%, regaining the 50-day and the 21-day moving average. CCJ Or uranium bouncing at the 21-day. Dexcom holding at the 21-day. Wing, a lot of the restaurants broke down, but not this one, up 3.3% on the day. Vertiv holding the 21-day moving average, going nice tight sideways. This is another leader. DraftKings with an upgrade today, bounced at the 50, closed on the 21. Spotify, a clear leader, hasn't even touched the 21 on this pullback. Raytheon, aerospace defense, a little bit of stuff going on in the Middle East and Ukraine and Russia. Look at the relative strength recently on this, forming a about 2-week base here right at the 100 level. CEG bounced at the 21 today. Amazon bounced at the 21 today. AppLovin undercut and reclaimed the 21. Coupang up 4%, up for the third straight day after its gap up on announcement that they are raising fees. You got pricing power in this market, more power to you. First Solar has pulled back all 4 days on lighter volume than the prior 5 up days. So this thing has been a heartbreaker in the past, but you can't ignore that chart, and you also can't ignore the growth numbers for 2024 and 2025. Pure Storage undercut and reclaim the 21. GoDaddy undercut and reclaim the 21. Datadog continues to show relative strength, bouncing at the 21. Astera Labs recent IPO tied to data center chips, undercut 70, finished at the top of the range and up 4.5%. And Charles Schwab, our custodian, 2 up days on volume now after a cup and handle breakout, trying to put the regional bank fears in the taillights. And that is your 21 over 21 list. Email me. Love to hear from you. The email's don@revereasset.com. If you're interested in becoming a client, my partner's Dan Stewart. That's dan@revereasset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932. Why should I reach out to Revere? Why should I become a client? Well, right here's why. Anybody can get you in. Who's going to get you out? The market, only 4% off the highs is the S&P 500, but leading stocks significantly worse than that. Mid caps much worse than that. The Dow much worse than that. Small caps much worse than that. We follow the trend here at Revere. We're not pie chart asset allocation, think long term. A 60% drawdown is okay because we think long term. That's garbage. Like I said, anybody can get you in. Who's going to get you out? Our flagship portfolio is named GROTECTION because it's designed to grow assets during uptrends and protect them during downtrends. We've seen as leaders topped and the markets have broken the 21-day and the 50-day moving average. You've watched us every night here, the changes to the portfolio, getting more defensive, explaining why we're getting more defensive, and preserving capital, keeping it dry for the next strong uptrend. It'll come. We don't know when, but we'll be ready for it. And if you follow us here at Revere, you'll be ready for it too. And with that, I'm going to wrap up the video for Tuesday, April 16th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.